Shiba Inu, or SHIB, just surged 17% in a single week, sending shockwaves through the crypto community and reigniting conversations about meme coins. This explosive move has lit up the crypto charts, grabbing everyone's attention, from casual investors to seasoned market operator hours. But this isn't just a minor blip on the radar. SHIB's price has soared to levels not seen in weeks, sparking a wave of excitement, speculation, and even a bit of FOMO among traders. For newcomers to the crypto space, seeing a coin jump nearly a fifth in value over just 7 days is both thrilling and a little dizzying. It's the kind of volatility that draws people in, but also keeps them on their toes. Meanwhile, for experienced traders, this sudden surge is more than just a headline. It could signal a real shift in market sentiment, moving from caution and uncertainty to a renewed sense of optimism and risk-taking. What's especially notable is that SHIB has managed to break through key resistance levels, a technical milestone that suggests buyers are now firmly in control and momentum is building. At the same time, social media is buzzing with SHIB-related posts, and trading activity is ramping up across major exchanges, confirming that this isn't just a random price spike, it's a coordinated rally. The rally is being fueled by significant market participation, with both retail and institutional players jumping in, making this a development that demands a closer look. To truly understand what's driving this surge, let's dive into a key technical indicator that's currently flashing some intriguing signals and could offer clues about SHIB's next move. To truly grasp SHIB's momentum and the forces driving its price, we need to explore one of the most insightful tools in a trader's arsenal: Bollinger Bands. Bollinger Bands are a favorite among traders for a reason. They provide a dynamic visual way to interpret price volatility and potential trend shifts. Imagine the price as water flowing between two riverbanks, the upper and lower Bollinger Bands. These bands act as flexible boundaries, containing most of the price action and helping us see when the market is heating up or cooling off. When the market becomes more volatile, the bands expand outward, making room for bigger price swings. When things calm down, the bands contract, signaling a quieter, less volatile market. This expansion and contraction visually map the market's energy, giving traders a sense of when to pay closer attention. At the heart of the bands is the middle line, a simple moving average, typically calculated over 20 days. Think of it as the river's central current, guiding the overall direction of price flow and smoothing out short-term noise. The upper and lower bands are set 2 standard deviations away from this average. Statistically, this means that about 90% of price action should stay within these boundaries, making it easier to spot when something unusual is happening. When the price hugs, or even breaks outside a band, it's a notable event. It can signal that the market is experiencing a surge in momentum, or that a reversal could be on the horizon. Right now, SHIB is walking the band, pressing against the upper Bollinger Band. This is a classic sign of strong upward momentum, often seen during powerful rallies when buyers are eager and confident. This behavior suggests that buyers are firmly in control, and the uptrend has real strength behind it. It's not just a fleeting spike, there's conviction in the move. While Bollinger Bands don't predict the future, they help us gauge the probability and psychology behind price moves. They offer a framework for understanding whether the market is overextended or poised for continuation. In strong trends, price can ride the upper band for an extended period, so seeing SHIB stick to the upper band isn't necessarily a sign of exhaustion. Instead, it can be a hallmark of a healthy persistent trend. The key is to use these signals in context, watching for clues about whether the trend might continue or if a reversal is brewing. By combining Bollinger Bands with other indicators and price patterns, traders can make more informed decisions and better navigate the ever-changing crypto markets. The midline of the Bollinger Bands, the 20-day moving average, is crucial right now. This midline serves as a benchmark for traders, helping them gauge the overall trend and potential reversals in the market. It's not just a line on a chart, it's a psychological level that many traders watch closely. For SHIB, this midline sits at about 760 units, while the current price is around 623 units after the recent surge. This gap between the current price and the midline represents a significant opportunity for traders looking to capitalize on short-term movements. That's a potential 22% upside if SHIB reverts to its average. Such a move could attract more buyers, further fueling the rally and pushing prices even higher. This isn't just a random target, it's a data-driven level based on recent price history. Historical data provides context, showing how SHIB has interacted with this midline in the past, making it a reliable indicator for future price action. For traders, it offers a clear, logical goal for the current rally. Knowing this target helps in setting realistic expectations and managing risk effectively. If SHIB can reach this midline, it would confirm bullish control and sustained recovery. This would be a strong signal that the market sentiment is shifting positively. Failing to reach it could mean the rally is losing steam. A failure to break above this level might indicate that the recent surge was just a temporary spike rather than a sustainable trend. Watching how SHIB interacts with this midline will be key for short-term direction. Traders will be closely monitoring the price action around this level to make informed decisions. The midline acts like a magnet, pulling price back toward equilibrium. This magnetic effect is why many traders consider it a critical level for determining market balance. The next few days will reveal if SHIB has the momentum to get there. Traders and investors alike will be watching closely to see if SHIB can maintain its upward trajectory and hit this crucial target. To predict what might happen, let's look back at December 2025, a time when SHIB faced a similar setup. Back then, SHIB had dropped far below its Bollinger midline, with sentiment low and volatility high. A surge in buying pressure sparked a rally, pulling price back toward, and then through, the midline. That move reversed the downtrend and kicked off a new bullish phase. The pattern: when SHIB gets stretched too far from its average, the snapback can be powerful. Today's technical setup closely mirrors that moment, giving analysts reason to watch closely. While history doesn't guarantee the future, it offers a valuable roadmap. The current rally isn't happening in isolation, it's following a pattern that's led to big moves before. This historical echo makes the 22% move to the midline a plausible scenario. Price action is only half the story. Trading volume tells us if a move is real. Volume is the fuel behind any rally. Without it, price gains are fragile. SHIB's recent surge came with a significant spike in trading volume, a clear sign of genuine market interest. This isn't just a few big players moving the price, it's broad participation from traders. High volume confirms the rally's legitimacy and suggests buyers have conviction. When volume and price rise together, it's a strong, bullish signal. If the rally had happened on low volume, it would be a red flag, easily reversed. Instead, SHIB's foundation looks solid, increasing the odds the trend continues. Volume is the difference between a fleeting spike and a sustainable move. With strong volume, SHIB's path to the midline target looks much more credible. Mean reversion is at the heart of Bollinger Bands. Think of it like a stretched rubber band. The midline is the anchor, the price is the end you pull. The further price moves from the midline, the more tension builds. Eventually, that tension snaps the price back toward the average. SHIB's recent rally is the start of that snapback after being stretched far below its midline. Statistically, extreme price moves are rare. Markets tend to correct back to the mean. When prices drop too far, value buyers step in. When they rise too fast, sellers take profits. This push and pull guides price back toward equilibrium. The 22% move to 760 units isn't wishful thinking. It's a logical reaction to build up tension. The big question: will SHIB break through the midline, or will it stall there? Let's recap. SHIB's 17% surge broke stagnation and signaled a shift in momentum. Bollinger Bands show price pressing the upper band. Buyers are in control. The midline at 760 units offers a clear data-driven target with a potential 22% upside. History shows similar setups have led to powerful rallies. Strong trading volume confirms this isn't just noise, it's real market conviction. All signs point to a constructive technical picture for SHIB, with the path of least resistance upward. These signals aren't guarantees, but they highlight key levels and trends to watch. The next chapter for SHIB is unfolding. Will the momentum carry it to the midline and beyond?